Hi, I'm Seth Freudberg. I'm the Director of Options Trading here at SMBU in Manhattan. I'm also the head trader of SMB's Options Trading Desk. So I'd like to talk today about a situation that's realistic. It happens to options traders all the time, which is you can't be in front of your screen. This can happen for a lot of reasons. If you're overseas, it may be because of time zones. You've got to sleep. You could be sick. You could have a meeting you've got to go to, an appointment of some sort. It may be the summer. You may want to go out and play golf, or you just want to take a vacation day. So if you're in a position now, in a lot of cases, if you're far out from options expiration on options income trades, this is not going to be too much of a problem. But if you are in the mode of trading where you're close to hitting target profits on a particular strategy, and you don't want to really give those profits back, you're ready to take the trade off, but you're not quite ready. This happens to people a lot. You're not quite ready. It hasn't quite hit its target. It needs a little time to do that, and you don't want to lose the profits you've made. So what do? If you don't want to take the trade off prematurely because you haven't hit your target yet. So exactly how do you handle it? Well, there are a lot of ways of handling this situation. You can pull the wings in of a butterfly or a condor, for example, pull them in a little bit tighter. That tends to cut gamma, and it cuts the potential large movement in the P&L on the trade. That's certainly one thing you can do, but there's a real easy thing you can do. It has a cost associated with it, but there's a real easy thing you can do to sort of put your trade into cold storage, I guess you'd call it. You sort of freeze the trade until after your appointment or after your illness or your golf match or whatever. And so rather than a forced exit, what I'd recommend in this case is that you buy an at-the-money straddle. Now, sometimes the trade is positioned such that you literally can buy a straddle, which is a long call and a long put, typically at the money. And if you bought that straddle at the money during the period of time that you're going to be away from your screen, whether it's a full day or half a day or whatever, if structured properly, it will put your trade into cold storage and you won't have to exit at a price that you don't want to exit. Now, the cost of this, the cost of buying that straddle, is that day's theta. Unless, of course, the market moves a lot, in which case you can actually make money on the straddle, but under those circumstances, you're probably losing money on the rest of your trade, and so therefore, it's not something you're hoping to happen. So, having said that, let's take a look at an example. This is a position. This is a bearish butterfly, which is one of the strategies that we trade on our trading desk. This is a bearish butterfly in full. All three butterflies are on, and actually we've got a protective call position up at 1020 to protect the upside in what has turned out to be a pretty bullish market over the last month or so. So let's take a look at the situation on this trade. We're up $5,200. The target profit on the trade is $7,500. So we're up good money. We don't want to give back that money, but we're not quite at our target profit, and we've got to go to the doctor, or we've got to go out and play golf, or we're sick. So what do we do? And the answer is the at-the-money straddle. So in this case, we decided to go ahead. The market at this point in time in this hypothetical example was up was at 1083 on the Russell 2000 index. The bearish butterflies typically traded on the Russell 2000 options. And so in this particular example, we went and bought 10 1080 puts for that April cycle and 10 1080 calls. That is called a straddle. And what that did was, well, let's first of all take a look at the straddle position itself. which you can see here is the 10 puts and the 10 calls. And here is what the position looks like graphically once you apply those 10 calls and those 10 puts. And as you can see, it really flattens out the trade, so that theoretically, if there's a 20-point movement in either direction, the trade should not give up much more than in the range of $500. That's giving up 10% of your profits. That's an acceptable amount, given that you can't defend your position because you are not going to be at your desk. So in other cases, the position may be sort of in a certain delta structure, such that you'll need to ratio it a little bit, where, let's say, if you were very negative deltas, and this position was not initially, but if you were very negative deltas, you could go in and buy more calls than puts to sort of flatten things out. So you have to play with it a little bit, but the core of the protective position is a long straddle at the money, and then you basically buy extra puts or extra calls depending upon the exact location of the structure itself. So really just wanted to share with you today that concept, so that next time you're in a rush, or suppose you get an emergency call, some personal matter, and you want to be in front of the screen for your positions, but you simply can't. If you just take a minute, line it up, and buy an at-the-money straddle, you may have to ratio it a little bit, but if you get it to the point where the position is roughly delta neutral with an at-the-money straddle, you can take a fair amount of movement without really giving up a lot of profits. And then a key, of course, is when you get back and you are in front of your screen again, you should remove that straddle, because it's eating up theta. These are positive theta positions. That straddle is eating up some of the positive time decay you had, because it is a negative time decay position, a straddle. So you want to come back and take that position off, because now you're back at the wheel, so you can steer the car. When you've got the straddle on, you can't steer the car. So basically the straddle is putting the trade in park, if you want to use that analogy. So once you're back in the car, then you can turn the ignition on and start driving again. So that's my tip for the week, and hope that it's helpful to you in situations where you just can't be in front of the screen. Take care, and we'll see you next week.
Become a member of our trading community by joining SMBU Premium. Each month, as a community, we'll work together to improve our trading with a shared hour of learning. On our trading desk in New York City, the best traders continually grow. In fact, the best traders trade to grow. SMBU Premium is packed with 12 webinars, one a month, focused on market-specific trader training that will help you become a better trader by the end of the month. Invest in yourself. Invest in your trading. As I wrote in the playbook, tomorrow you can be better than you are today. SMBU Premium, how good can you be?